Welcome to another episode of Contributors Corner. Today we're exploring the fascinating intersection between Bitcoin, the global demand for raw materials, and the ripple effects across sectors like renewable energy and mining. I'm thrilled to be joined by mining and entrepreneur and brilliant-minded Ivan Bebek, CEO and chairman of Coppernico Metals, and my trusted partner in crime, Michael Succurro, for all things finance and digital assets. So let's dive in. First up, welcome, Ivan. Great to have you join Michael and I.
Thank you so much. It's an honor to be here at this pivotal time in the copper demand world, as well as the electrification through many great things, such as the new crypto and AI applications that we're seeing across the world.
Yeah, so Bitcoin and copper, an unlikely partnership, or is it? So Ivan, let's start with you here. As Bitcoin mining expands, so does the need for copper and electrical components. So projections right now are indicating that global copper demand will rise by about 20% by 2035, reaching approximately 30 million metric tons annually. So can you break down the relationship between Bitcoin mining infrastructure and the copper demand?
Well, sure. My strength is knowing more about the copper demand and where the copper supply is going to be really hard to meet that demand. But as far as the Bitcoin side, you don't have to be too technical to understand that anything electrical involves copper. And also in the case of Bitcoin, heat dissipation is also a big factor with those big servers that they use to keep the crypto alive. It's also being seen widely used in AI applications and electric cars. So I think the future is most certainly digital, and it's most certainly electric in terms of vehicles and transportation. But when you get down to the digital currency that everyone's excited about, I think there has to be a big consideration for both the use of the copper that's going to wire a lot of these electronic devices, that's going to keep the heat dissipation in some of these bigger server rooms, as well as the need to, at the same time, support the electrification in terms of vehicles and infrastructure around the globe. So it's kind of a trifecta. A digital future is an electric future. And I think that's the most common, simple way to understand the application. We have not seen copper cryptocurrencies yet. It's something really hard to find and quantify in value, but I wouldn't put it past the crypto world to address tokens that are backed by a significant copper usage, because the obvious outlook on supply and demand, where demand will far outpace supply in the next 10 years, is quite considerable on the copper side. So from that perspective, it's a fascinating time and a fascinating sector where there's going to be massive applications that I feel we're in the infancy of, much like in the dot-com era back in 2000, 1999, 2000, when I entered the sector. Everyone was confused by the internet, or not confused, but inspired and enthused about a new way to communicate, a new way to work and function at a much more efficient level. And we quickly learned in the dot-com era, after the initial hype and excitement, that it was there to stay. And it's become a multi-trillion-dollar business that we almost take for granted today of how necessary it is. In the case of crypto, I feel this is like the 2000, early 2000 era or late 99 era of the adoption of cryptocurrencies and blockchain processes, where you can move money with ease instantaneously, cut out a lot of those transactional fees, and in some cases, the decentralized ability to have an investment that's also the currency that you're using to make purchases. So very, very fitting time frame for crypto to be the new dot-com era, in my view. And on the mining side of metals, copper is a massive one. It's going to supply a lot of the wires and the servers and a lot of the circuit boards that are going to affect this. But energy is also going to become something of a major topic. It already has, and you're going to see nuclear, you're going to see hydrogen, you're going to see a lot of different ways that we're going to look to create energy, wind, solar, that's going to help supply the power needed. So from my view, as an explorer of raw materials, watching a sector develop and watching the world go into a very steep transition to modernization in the last few years, we kind of feel it's just taking off. The curve is very steep. I think the timing and the necessity of raw materials has never been higher. There's never been a larger population on the planet. That's obviously how we've grown, but from 1980s to now, we've doubled the population globally. So there's a new demand curve that's hitting as we also throw in the electrification factors and digital world. So that's my perspective. It's very needed. It's a must-have. It's not a choice. Aluminum is the secondary to copper that you could use, but it has heat issues and it's not as stable or as malleable as copper would be, in the sense where you don't see very many aluminum wired houses. if you were to shift the demand from copper to the aluminum world, or if you were to share it, at what cost? And I think it would be safety of fires being created and overheating aluminum wires in a lot of cases. So copper still is the best metal. Gold is the best conductor of all metal, but it's far too expensive to have gold wires than copper wires. But from my perspective, it's a much needed, it's an absolute need, and it fits well with the timing of the growth on multiple levels of demand.
Yeah, absolutely. I mean, Michael, from a financial perspective then, with Bitcoin often called the digital gold, how do you see its demand driving up the need for raw materials like copper?
Well, Ivan makes a great point looking back at the .com boom, and that's where we're in right now. We actually have two different booms. We have the crypto boom and also the AI boom, like he had mentioned. And again, let's look at AI real quickly. It's all about NVIDIA. It's all about GPUs, CPUs. And going back to what Ivan said, what's the best, dissipation of heat? What are these products all made out of? It's copper, some gold, a little bit of nickel, but copper is the main source, the main metal holding everything together. Anything electrical has to deal back with copper. So now flipping that to the crypto side, a lot of these mining machines, these blockchains, AI, server room, whatever it may be, has an electrical component to it. No, any which way you look at it, there's an electrical component right from the computer you're buying your Bitcoin from, the doohickey you literally use, the live ledger apps, and the servers that are processing the blockchain, as well as the devices that are mining it. So what I explain to my investors is that, look, if you're too scared about crypto still, because you have those older investors, they're very used to real estate, tangible assets, or the stock market, S&P 500, Dow Jones, that's it. Crypto's like, this is all over the place for me. How do I get in? Or I don't want to get in, but how do I take advantage? And I explain to them, you take advantage with, buying stock or purchasing stock into companies such as copper mining companies, gold mining, nickel mining, but specifically copper, given that, again, it's the most used metal when it comes to cryptocurrencies, when it comes to the GPUs, CPUs, and all the electronics behind it.
So let's talk about the raw material demand in a digital economy then. Ivan, beyond Bitcoin, where else do you see increased demand for copper driving innovation or strain in the industry?
Yeah, well, cars are a massive one. And for those who don't have an electric car, hybrid car, electric car uses about 186 pounds of copper versus 39 pounds of copper in a typical car. In batteries, in the transfer of your wiring to plug in your electric car, these stations. So there's a lot of functional transportation uses, also buses and trains and anything that you see being built, any house you see being built. And I pick houses residentially because there's a massive reforestation or renovation going on or knocking down based on the last baby boom and the houses that were built back then. There's a new influx, at least where I live in Arizona and Vancouver, but seeing across Arizona, there's an age to our infrastructure that's coming for renewal, not just here globally. And then you see countries like China expanding, 1.5 billion people, and India, coming online. And you don't realize it, but a large portion of that country is still not modern enough. And in the case of India, they need pipes for drinking water in a lot of areas and stuff. And so that's another place it's used because it's an antibacterial metal that's also very safe and to drink from. It's versus obviously lead or aluminum or something else. It's a safe one that we've used from the beginning of time. So I see it in infrastructure. I think the vehicles is a major push. We all want a greener society of where we're operating and where the air our kids can breathe and the green future of the planet. Unfortunately, it's not as easy to find as it is to use. And that's something that we'll talk about, I'm sure, here in a minute. But yeah, raw materials are dramatically needed for the electrification of the planet and in so many facets of what we just talked about. Michael mentioned, from the computers right down to the cars. But I think the cars is the unexpected one because the movement towards electric vehicles is kind of the biggest heartfelt one we've all seen. You have to ask yourself this question as an investor. And, I missed the crypto wave. I had an opportunity to be a big part of it because I'm so focused on the hard assets, the kind of dinosaur investor, the older people, as you said, Michael, in the sense of if I can touch it, or it's behind me here in this photo, if I can touch it, see it, and physically use it, it makes a lot of sense to me. But where my career has really spent the last 25 years has been learning how hard it's to find it and how long it takes to bring it online to mine it, and what's happening to the largest copper mines in the world that are now about halfway of what they're producing. And a simple example for those of you who don't know it, BHP's, I believe, the largest miner in the world, and the largest mine operating is called Escondida in Chile. and they're putting in $7 billion just to keep the mine going because they're going deeper. And the grades, it becomes more expensive as you go deeper in these big pits to get down and lift the copper out with these trucks. It's just more transportation. But the good news is there is copper out there to find, and the world is going to burn cleaner in the next 50, 100 years than it ever has before. And mining is governed in a way that it never has been before, with the most strictest rules environmentally and socially and how people are being treated. So there's been a lot of improvements there. There just hasn't been a lot of major discoveries in this world and this planet. And that's what we're all looking for, what we're looking for as a company right now.
So, Michael, maybe you can add on to this. Supply constraints in the raw materials market they're nothing new. So how do you think Bitcoin's growth amplifies these constraints?
Well, my worry, my thought is if you go back to early COVID, just to use an example here, I'm a big car guy. So when it came to BMW and Mercedes, when it comes to their M Sport and their AMGs, that's their sporty types. What had happened was there's actually a shortage of the chips that were used to create these, add the extra combustion to the engine for the AMGs and the M-Power BMWs. And what we had seen was actually Mercedes, I don't know if a lot of people remember this, Mercedes actually stopped production for that time for their AMGs because they said we either want to put out quality or we're not going to put anything on at all. Where the issue was with BMW, and I am a BMW fan, unfortunately, except for this, was that they said, no worries, we're going to find a cheaper Chinese counterpart and we're going to put that in instead. And a lot of engines were blowing, there's a lot of combustion issues, and there's a lot of recalls on these cars. So why I bring up that example is because I feel like this may be the same thing that's going to be happening right now, where there is this boom, there's this bull run that's happening with crypto right now. But if the raw materials are not there, you can't process enough Bitcoin or any of these crypto currencies fast enough, then there's going to be that slowdown in the market. And that's where you're going to see a downturn in this market because, again, like Ivan's saying, if they can't find enough material right away, there's not enough material to process and convert into these different electrical components just for one mining machine. So what happens is it actually slows down the process of these transactions, slows down the process of mining these cryptocurrencies, mining Bitcoin. So what happens is it naturally just slows down the market. Now, again, no expert on that, but that's what I foresee. Just use that same example of BMW, Mercedes, what they faced back in late 2020 due to COVID and the shortage of the GPU and CPU chips.
Well, just on that note of the slowdown, sorry to interrupt there, Lyndsay, the prices go up when things take longer to get. And so that's a fascinating point you made there. And I'm a big fan of both those cars, and I'm a car guy and other cars as well. And I noticed now Mercedes is going hybrid on every model they have, right? So which is a movement towards electric, and they have to compete that way because the efficiency is better. In the case of slowing down, we all saw that the chip issue that came out of Taiwan with the factory burning and the new demand curve that's gone up because everyone was shopping during COVID. We saw things selling above real price ticker in MSRP and car dealerships. I was looking at cars at that time and giving 10% premiums or 30 in some cases for some vehicles. And I think that's just a very good case that's being made for the future where we're headed. I expect a highly inflationary environment. I expect a very slow supply of copper. So I'm anticipating massive performance for the rest of my lifetime in the copper price, which is why it's exciting to explore for such a needed metal. And I'm doing the arm wave here for why copper here and how it affects me, but why I'm aligning myself with it. On the crypto side and the digitization and the cryptocurrencies, Bitcoins and everything else, it's okay to have a big position in a running market, but you need to diversify, in my view. And I'm going to gain exposure to crypto because it is the future. I don't have it yet. But I think if I was in a crypto portfolio that's performed ridiculously, as we've seen some of these things go, I'd start expanding my portfolio into raw materials, into copper. I mean, you can pick the producing copper companies and expect perpetual performance over time, because there's a really cool stat for a big copper mine to be discovered that could affect the global supply of copper. You're looking at anywhere from 20 to 30 years before that produces copper. That's well past the 2030 that you mentioned, Lyndsay. There is low-grade copper mines around the world that could be turned on in higher copper prices, but the costs of bringing those to market are anywhere from $5 to $12 billion. And if you bring a low-grade, not as rich of a copper mine online, you have to move a lot more rock to get a lot less copper. So there'll be a slow solution to a massive demand curve. So it's a phenomenal case for the copper side. Liking vehicles, I like my laptop, my iPad, my iPhone. Everything that I'm using in the chair I'm sitting on is raw materials, except for the desks made from wood as I sit here right now. And understanding that and increased population and increased use of technology and ways to communicate that are all electrically based, it's a big raw material push. So my encouragement is diversify, make sure you have some exposure. It's been about a 13-year bear market in our sector. That has been the biggest disconnect I've ever seen with a demand curve that's so obvious in the equities and where we're at, and the need in such a small market. If 2 or 3% of the world's population comes over to gold or copper, as investors, in addition to where they are now, you would see one of the most euphoric bull markets in history for metals. And I think that is on the horizon over the next 3 years. I think you could see that kind of influx. As we've reacted quickly and steeply and sharply to Bitcoin, I'll use that as the main leading coin. Look at that performance from when I first looked at it was $400 a coin. Now, I think past $100,000 a coin. And where is it going? That is what I think is coming, not to that exact return, because that's a penny stock going to beyond the moon, but in terms of mining, but those kind of massive influxes that were there on the new generation of crypto, it's going to be seeing when the world finally realizes that the car I drive, the phone I have in my hand, the crypto that I'm using to pay or invest into, it's going to need a lot more metal that's not being found anymore. And our sector in a bear market, it got really small. It contracted dramatically. So a lot less mines have been getting found. There's a very poor track record in the last decade of new major discoveries that could actually impact various raw materials. Money's starting to flow into the sector now, and that should improve it. But people, in my view, and you have a big a wealth club there, Michael, is my view is a lot of people are buying what's going up more than what's going to go up, because it's fun to buy something on Monday that's up on a Friday and keep going. I find a lot of people can't explain the true necessity or meaning of a crypto or a Bitcoin. It's a popularity performer, which is definitely going to be the future, but a lot of lack of knowledge on exactly how useful and needed it is. That education is slowly increasing. Whereas on the mining side, I feel that same gap occurs on how much copper is needed, how big the problem really is. And what we've seen behind the scenes is we've seen China making moves around the world for the last 20 years, going into Africa, South America, and they're paying for infrastructure in exchange for controlling the supply of copper that comes out. They're sinking billions into infrastructure in exchange to have a right of first offer on copper that comes out at market price. The US is declaring copper a strategic or critical metal now, and there's a lot of posturing in various countries for nickel, for copper, for different assets. There's kind of a global world war on economics going on in the background, and long-term thinkers, as China and the US, everyone has to be, there's a fight for supply. I see things geopolitically that support this in different governments. I see things, within companies in terms of we're a Canadian-based company. If we sell it after making a big copper discovery, we need permission from the Canadian government to sell our company to a Chinese party or to anybody. There's rules of that. There's a lot of competitive background on natural resources, which is the pitch. If you believe in crypto as the future, if you believe in electric cars, you need to start paying more attention to the raw materials, because they're overly needed and underly being discovered right now.
That's one of the things that we talked about with Adam O'Brien in the last episode was, Bitcoin, you're right. You don't know the actual value of it. And so many people, they took something like the US presidential election, and a lot of investors, yes, they're looking at policies, they're looking at all of these things, but at the end of the day, investors want to see performance. They want to see numbers. And if it's going up, they're going to look at that harder than if it's going down. So that was a great point that you made there. I want to actually jump over to the renewable energy boost. So Ivan, transitioning to renewable energy is a key focus globally. You touched on this a little bit. In 2023, the global copper demand for clean energy technologies was over 6,000 kilotons. So how critical do you think copper is in this shift, and what role do you see Bitcoin playing in accelerating or complicating this transition?
Well, I think it's going to complicate it by adding more demand for it, and that part is clear. When you go fill up your car with gas at the gas station, do you ever ask where that gas came from? you ever ask how much is left where it came from? It's something that's missed by all. I got to get to the next spot. But if you could take a minute and look at the gas or the fuel, the renewable energies that we're headed towards, there's a better way to be more efficient with energy than we have been. And I think that's the movement. We certainly see it. We saw the impact of no cars on the roads during COVID shutdowns. And we saw there were some really cool maps they did tracking pollution where there was no pollution in China, different places. So I think the case for renewable energy sources is really strong, but there is some caveats to it. The windmills kill a lot of birds, tens of thousands of birds each year. So they're not all that friendly to the environment. And you look over at solar, the pollution of a expired solar panels, one of the worst things you could pollute the planet with. So there's some factors that go there. It's not an easy solution. You go to nuclear, and nuclear is something I think is under present, but there's a risk of obviously combustion there. It could blow up, and where you put it, how you use it, in vehicles or not, the power, hydrogen, or different ways. I don't think there's a perfect answer to the renewable energy part. Water's been a big one. They does a lot of run of water where they put small dams on rivers and stuff. Again, does that impact our ecosystem, our salmon, our fishes, our trouts, and how that runs? So I think renewable energy it's got a very tough path forward, which makes it extremely valuable in place when it's there. I think energy prices will go up. I think there's no question that we need to burn cleaner than we have burned. I think we do have to pay the piper, though, in the terms of the pollution of creating all these batteries, to creating this electric society, to create these mines, to go mine the metal needed. We're going to have to go through some hard years with some pollution. And if we can mitigate that with really clean, renewable energy, it's going to be really, really positive for us. So my view is the crypto adds to the draw on renewable energy. By all means, it's very clear that there's a lot of power needed for crypto and crypto mining. And secondly, is it's not an easy place to supply it as the raw materials isn't either.
Let's flip to the digital gold narrative, shall we? So, Michael, you can talk a bit about this. Bitcoin is often called, like I said, digital gold, as I mentioned, but it depends on physical resources like copper to thrive. So does this create a paradox for its narrative as a scarce standalone asset?
Yeah, I believe so, because again, it goes back to what Ivan was just talking about, and he made a great point when it came to renewable energy. Right now, I feel like it's sort of like a double-edged sword, because again, it's going back to the cars. So you're driving your car and, you switch to EV, like you said, in 2020, 2021, those pollution maps. I remember seeing that they showed like even China and India is the first time they had blue skies in like 30 years. So it's great. You switch to these electric cars and not producing the emissions like our regular cars do. But the double-edged sword fact of it is that the plastic casing that the 6 or 8 batteries that are in your car, disposing of it, the solar panels, again, they're one of the highest pollutants out there. So I feel this is the same impact we're going to see with the crypto world with Bitcoin, because again, it's a great tool to the decentralization of these big banks, lower fees, the ease of transaction of funds across the world. But again, the renewable energy aspect of it is pretty bad. The stat is for mining one Bitcoin, it takes 155,000 kilowatts of energy. And that's a lot. And I've dealt with actually the financing of a couple facilities that I had clients purchase, commercial industrial units that they wanted to purchase to mine cryptocurrency. And a lot of them actually failed after, because for the speed of what they were mining at versus the consumption cost of all the cooling systems, the dissipation of the heat, their electrical bill and the overall, and just the safety of actually running one of these facilities, the juice just wasn't worth the squeeze. And yes, there's different parts of the world that may be better. I had mentioned earlier before we jumped on the call, Arizona, California, Nevada, Texas. I remember driving through California to Nevada. There's these big solar fields where they position each day as the sun rises and the sun sets. So it may be cheaper than as they're using solar power, but again, double-edged sword. Once those solar panels expire, they're heavy pollutants on the earth. So that's the issue I see, just like Ivan was talking about, moving forward to the future, is that yes, demand's going to be there, but there's going to be a large strain when it comes to renewable energy, and then a large strain on the raw materials as well. Because again, there's also, and Ivan can speak more on this, I'm sure there's a lot of pollution as well coming to these raw materials. Yes, they're making more restraints, becoming more, a lot more environmentally friendly, the social economics around it as well that are treating people a lot better, but there's still a lot of countries that are not treating people right with it and going probably the harshest way they could possibly mine, for the earth. And I feel like that's going to be a large issue as well, not just the actual mining of the cryptocurrency, but the mining to increase the supply of the raw materials that we need.
Yeah, I mean, this is your sector. So what parallels can we draw between the supply constraints of copper and Bitcoin's fixed supply cap then?
Yeah, so I think, a lot of what Michael just said makes a lot of sense. The one place where it's changed dramatically is the cleanliness of the mines in second world and first world countries is dramatically improved. There is a lot of respect towards the pollution. There are mines now that are operating with electric mining trucks, and you can control them with an iPad. And so, the bigger impact of a big copper mine and a big open pit scenario is a big crater in the earth. And who lives on top of it or beside it and has to be displaced, and what does that do to the ecosystem in the area? It's a double-edged sword. We want to burn cleaner, but at a cost. And so you get a lot of NGOs, environmentalists that want a cleaner planet, but at the same time, their solution comes at a lot of mining that's going to have impact, as Michael's pointed out here. Maybe not as bad as it was, but still has impact, like considerable impact for sure. So I think on that basis, there's no easy solution as far as the digital gold that people are treating it as. And I look at things, I'm a gold bug by full disclosure. That's why have been hesitant to jump onto the Bitcoin kind of train. And we were talking a minute off camera there with Michael about what percentage of net worth goes into Bitcoin versus, for me, in my mind, I was thinking for gold. I'd be comfortable having 90% of my net worth into gold, and 10% into cash or 70% plus some, equities and different diversified investments. But gold has such a long history. It's always been stable and it's performed well against inflation and the lower valuation of currencies across the world, the fiat currencies. So you can look at a gold chart of 20 years or 25. It started at $262 an ounce when I got it in the industry in 1999. And now it's trading around 2,600 and change per ounce. So it's a safe place. I think the safety is mitigated with performance in the case of Bitcoin. It's not safe because it's new. It can be volatile. We've seen it retract aggressively. And if you're not an experienced investor, you can get shaken out of your coins at a big loss. But we've also seen the skyrocketing performance that gold has never done and nothing has done to the extent of where Bitcoin going from hundreds of dollars or $1,000 or $2,000 to $100,000 a coin. So I think that the appeal, there's a place for it. It's definitely the leader. It comes at a cost that we don't talk a lot about. And there was a period there when they were trying to, establish gold as the newer Bitcoin as the new digital gold. You don't need power to keep gold alive. You don't need 175 kilowatts, I think was the number Michael mentioned, to keep gold alive. You can touch gold, you can feel gold, you can have it. If you lose your password, you still have your gold. There's a lot of factors, and I lose passwords often and reset them all the time, or they get compromised. So I think there's a place for the future for sure. And I'm now starting to look at the crypto world as one that I want to have more exposure in, because I want to be modern as well. But I also have the other side of it, the coverage of having massive exposure to raw materials and equities that can perform very well, keeping that crypto going and that digital future going. So I think there's a balance for both. I think Bitcoin is the leader, as gold is, in the financial system, or has been for years. Central banks have bought record gold in history in the last few years. I know that's a hedge against the future of money printing and lowering of interest rates to kind of re-stimulate economies that have kind of had their high and low since COVID. But as far as the digital future, it needs metal. It makes my career 10 times more exciting, although it's much harder to find a mine today than it's ever been before. Not because we aren't looking. Since 2015, I think our spend in the group that I've been a pioneer in founding has been over $200 million. So it's real money we're putting into the ground to look for these things across multiple different companies. And when you look at that with no major mine yet, it's the indications in some cases that we could have one. And you look at that time frame, 9 years, in some of these cases, it's hard. And the reason why is because the mines you could touch and put your hand on, they've all been found, the ones that were sticking out of the ground. We're now into the ones that are either in troubling parts of the world, challenging social aspects to get through, or governments geopolitically that keep changing often, that don't give you ease of permits and ability to bring these mines forward. So it's the best environment you could possibly have on the mining side that hasn't been realized yet in mining equities. And I will go on record today, and we'll see it in a year from now, of how right I was or wasn't. On the crypto side, this is just the beginning. Bitcoin is just the beginning. I don't know how. I would refer to Michael for advice of how this is all going to place in the next few years or 10 years down the road when you look a little bit further out. But I could see us in, I take self-driving cars in Arizona all the time, autonomous cars. I could see a crypto wallet being active. I could see the tokenization of companies like mine that look for mines. I can see the tokenization of a lot of assets, a lot of different things in the world. And I've talked to some very famous entrepreneurs about this. I just think we're going to a digital society. And if you could have a currency, whether it's off of a mine that's being found in a time when the metal prices are going up, or if you could have a currency off of a business that runs with profitability or any kind of volatility, where buying a new Mercedes instead of $100,000, costs the equivalent of $20,000 because your coin went up that day. I mean, that's really the shortcut to making life less expensive in an inflationary environment that's going to work against us as metal supply gets to be more challenging and materials needed cause slower production and higher prices.
As always, these conversations are packed full of useful knowledge for your portfolio decisions. And remember, these are the opinions of our own with vested interests in particular assets and companies. Always be sure to speak with your financial advisor and know your own risk tolerance. Ivan, again, such a joy. Thank you for joining Michael and I today.
Thank you both. It was awesome meeting you, Michael, and Lyndsay. Always an absolute pleasure. Thank you.
Great meeting you as well, Ivan.
Yeah, that's it for this episode. Join Michael and I next time as we continue to unveil the evolving world of finance and technology.